Today in crypto. Even though Bitcoin has struggled to reclaim its recent high of $42,000, projections of BTC reaching $100,000 still seem achievable to some. Despite Bitcoin price cooling off in recent days, with the premier cryptocurrency currently hovering around the $32,000 mark, it is still showcasing strong technicals as well as a 30-day price gain of nearly 40%. Not only that, but even since its recent dip, which has seen the digital asset fall from its recently established all-time high of around $42,000 to its present value, the top crypto is still in the green over the last 12 months, exhibiting a value spike of nearly 300%. In this regard, since the fourth quarter of 2019, a number of traditional finance players have been predicting big things for Bitcoin, BTC, especially as governments all over the world continue to print money in the form of economic stimulus packages, leading to fears of inflation becoming more prevalent but also of a looming economic disaster that could potentially result in a global recession of unprecedented proportions. For example, during the second quarter of 2020, the economy of the United States plunged at an unprecedented rate, with the global powerhouse's gross domestic product, which outlines a nation's total output of goods and services, falling by 31.4%. In the wake of such developments, including an alarming rate of money being printed by central banks globally, many investment houses and banking institutions are now beginning to see a future for Bitcoin, especially as a hedge against monetary inflation, despite its current volatility levels. Earlier this year, American megabank J.P. Morgan Chase's strategy team, led by Nikolaos Panagiotis, claimed that a theoretical target of $146,000 plus could be sustainable for BTC by the end of 2021, pushing the narrative that the digital currency seems to be a prime candidate for replacing gold as a long-term store of value, especially for a budding base of younger, more tech-savvy investors. In a similar vein, new data released by Pantera Capital, an investment firm and hedge fund, reiterates J.P. Morgan's sentiments surrounding BTC, suggesting that its price action is closely following the stock-to-flow model, thus reaffirming its faith in the digital asset hitting the $115,000 mark by August 1. The S2F model that was developed by Plan looks at BTC having events that take place roughly every 4 years and how they play a direct role in spurring the currency's value roughly 6 months after each cycle. In this regard, one can see that following each of the previous 3 halvings, Bitcoin has shown remarkable growth. For example, after the May 2020 halving, the price of 1 BTC rested at $8,000, only to shoot past the $15,000 threshold after exactly 6 months. Raiffeisen Bank too employed the S2F model in a recent report to ascertain where Bitcoin might be headed in the near future. According to the company's research team, price targets beyond the $100,000 mark or even $1 million may be possible to achieve. The fact is, now that the value has more than tripled in 2020 and momentum remains strong, future further gains should not surprise us, the study reads. Other prominent players from the realm of traditional finance who have projected big things for BTC in the short term include individuals such as Andy Ye, Public Policy Director for Greater China at cross-border payments provider Visa, who believes that this rally is different from the one in 2017, as it marks a shift from high speculative, non-functioning tokens toward Bitcoin and Ether, ETH. Similarly, Thomas Fitzpatrick, global head of US-based financial giant Citibank's CitiFX Technicals Market Insight product, allegedly wrote in a private report, which was leaked online, that by December, Bitcoin has the potential to scale up to a price of around $318,000. Even though the S2F model was at first one of the few technical indicators signaling Bitcoin's astronomical rise, it now seems that an increasing number of experts and analysts are beginning to see the technological and monetary proposition being put forth by BTC and other cryptocurrencies. Sam Tabar, co-founder of Fluidity, the company behind the AirSwap trading platform, and former head of capital strategy for Merrill Lynch told Cointelegraph that everyone needs to remember that the optimism surrounding BTC at this point is not just fluff, as speculation is now backed by real substance, adding, As a proxy for a global currency, the friction of buying crypto has been significantly reduced, as it's easier than ever before to acquire Bitcoin. Similarly, as a proxy for gold, Tabar opined that Bitcoin is being used as a hedge against the U.S. dollar, especially as the newly elected President Joe Biden looks to spur U.S. dollar spending in order to prop up the economy against the effects of COVID-19 lockdowns. Providing a more technical breakdown as to why institutions are betting big on Bitcoin, J.P. Terrio, CEO of asset trading platform Uphold, told Cointelegraph that unlike traditional dollar debasement havens like gold and other commodities, Bitcoin has zero elasticity on the supply side. He highlighted that if/when the price of gold reaches $3,000, marginal gold mines will once again fire up, with the same dynamic being applicable with oil and every other non-math-based unit of account. Terrio believes that the unique lack of supply-side elasticity means that, price-wise, BTC will respond more precipitously than things like gold, to the exact same drivers. He further added, lastly, the ever-increasing institutional demand seems to be changing the digital asset market, which in turn is driving many banks to make seemingly outlandish price projections in relation to BTC. For instance, more funds are now looking to enter the crypto game, and recently, American firm Osprey Funds announced that it will be launching its over-the-counter crypto solution, Osprey Bitcoin Trust, which will likely rival Grayscale Bitcoin Trust. When looking at the market sentiment surrounding Bitcoin, the digital currency is increasingly showing correlations with the core functions traditionally afforded by traditional fiat currencies for their users. That is, it has become a unit of account, a standard of deferred payments and, lastly, a tangible long-term store of value. Also, over the course of 2020, an increasing number of e-commerce platforms added support for Bitcoin and other cryptocurrencies as a method of transaction to pay for goods and services. PayPal, for example, a company that boasts a 28 million-strong merchant base, now allows users to buy, sell and store cryptocurrencies via its platform. On the subject, Paolo Ardoino, Chief Technology Officer of crypto exchange Bitfinex, told Cointelegraph that consumer sentiment around Bitcoin is overwhelmingly bullish right now and that people who are celebrating the rise of various altcoins and other off-chain solutions owe their success to the flagship crypto, adding, Terrio believes that the sentiment driving BTC is a result of previously unseen levels of currency debasement generated by the monetary response to COVID-19. Beyond retail speculation, he believes corporations are looking to hedge their fiat exposure, evidently seeing some relative advantages of Bitcoin over traditional havens like gold and subsequently jumping in. The early jumpers have been handsomely rewarded, and so the trend is likely to continue, he added. Lastly, Tabar highlighted that one of the more recent signs of growing consumer sentiment and institutional acceptance regarding BTC has come in the form of recent filings made by BlackRock, an American multinational investment management corporation with $8.7 trillion in assets under management as of the end of 2020. A quick look at the filing showcases a strong use of crypto-oriented language alluding to the company's funds potentially engaging in futures contracts based on Bitcoin. The DeFi boom and search for projects offering interoperability recently sent REN's price and total value locked to new all-time highs. Interoperability between blockchains is rapidly becoming one of the buzz phrases being thrown around when discussing decentralized finance and the coins most likely to rally during an altcoin bull run. The rapid growth of DeFi, its ever-expanding total value locked and soaring ETH gas fees further highlight the sector's need for a Layer 2 option that also supports the ability to transact value across different networks. REN's open protocol is designed specifically to fill this need by providing interoperability and liquidity between the top blockchains including Bitcoin, Ethereum, and Zcash. Over the past 3 weeks the price of REN has increased by more than 200%. Going from $0.251 on December 20 2027 to a new all-time high of $0.778 on January 20, driven by a record $369 million in 24-hour volume. 3 reasons for the recent price surge in the price of REN include the announcement of a collaboration with Google, the continued increase in total value locked on the platform, and the ability to earn passive income in multiple cryptocurrencies through the operation of a DAR node. On Jan 19, the REN team tweeted, not long after the tweet, REN price began to rally to a new all-time high. As mentioned in the tweet, Asilo is an open and flexible framework from Google designed to help build portable applications that run on secure enclave hardware. The secure enclave hardware allows users to run general-purpose applications in a secure environment where both the data and the application itself cannot be compromised by anyone, including the user. This makes for a more secure experience for all parties involved and helps protect against malicious code and backdoor attacks. Asilo also makes it possible to port an application from one type of hardware to the next, meaning that developers can support multiple implementations with relative ease, including Intel implementations, AMD implementations, and any others that appear in the future. The diversity of choice this allows is an important feature to ensure decentralization on the network. Community engagement and added value are key factors when it comes to the long-term success of a blockchain project. Since the release of the REN virtual machine mainnet, REN VM, in May 2020, engagement on the platform has steadily increased as Bitcoin holders now had another way to bring their BTC to Ethereum in the growing DeFi space. As seen in the chart below, the total value locked on the REN platform reached a new all-time high of $653.6 million on January 20, and a total of 14,670 BTC are locked on the platform to create Chainlink. The list of assets that REN VM supports continues to grow with BTC, Bitcoin Cash, BISIH, Zcash, ZEC, Filecoin, FIL, Terra, LUNA, Dogecoin, DOGE, and Digibyte, DGB, currently available to transact on the Ethereum and Binance blockchains. Development is currently underway to make it possible to interact on the Polkadot, DOT, Solana, SOL, and Cosmos, ATOM, networks as well, which would further enhance the interoperability provided. The third driving force behind the recent price appreciation of REN relates to the REN token use case and how it can help users earn passive income. REN VM is a network of virtual computers that make up a virtual machine, which are also referred to as DAR nodes. REN token holders who wish to operate a DAR node need to lock up 100,000 REN, which will enable them to process transactions on the network and earn a fee in the form of the token transacted. Thus, a DAR node operator has the opportunity to earn passive income in the form of multiple different cryptocurrencies from one location. As can be seen in the above graphic, 13% of REN's total supply is currently bonded on the platform and supports the operation of DAR nodes. During the most recently completed cycle, the network as a whole earned $839,128 in fees in the form of BTC, ZEC, FIL and BCH. The total network fees collected since the launch of the REN VM equals $2,975 million. The continued addition of new tokens and interoperability with new blockchains will likely see increased usage of the network and an increase in the amount of fees earned. At the current price of $0.6157, it costs $61,570 to operate a DAR node. As activity on the network increases, the amount of fees generated will also increase, making it even more lucrative for token holders to operate a DAR node. This has the potential to lead to further price appreciation from REN, as every new DAR node results in a direct decrease in its circulating supply. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph.com. Every investment and trading move involves risk. You should conduct your own research when making a decision. Chainlink has entered price discovery and traders should watch several key levels for the next possible top. Chainlink, LINK, remains to be one of the best performing cryptocurrencies in the past 12 months. As of January 23, Link is now bigger than Litecoin, LTC, and now number 7 at $9.2 billion market capitalization, After surpassing Bitcoin Cash earlier this week, the Link price surge also coincided with rumors this week that Grayscale is preparing to add a Chainlink trust product. This news event likely played a part in the price of Chainlink rallying toward new all-time highs, making Link, once again, one of the best performing cryptocurrencies. The daily chart for Chainlink shows massive volatility in recent months, but also some beautiful price action. Every previous level of resistance flipped for support, after which the price continued climbing almost in textbook fashion. That's the beautiful nature of price action and trading in general. Most people have the impulse to enter a position when the price is soaring, but those support/resistance flips actually give the best entries. Specifically, the first support/resistance flip occurred at the $10 level, after which the same happened with the $13 and $17.30 areas. Therefore, the crucial level to watch for potentially more downside is the $17.30 area, as well as the $19.50 zone. This latter area is the previous all-time high in 2020 and possibly the point of the next support/resistance flip, which would be bullish for more upside. As Chainlink is in price discovery, it becomes difficult to define the potential top structure's next points of interest. The Fibonacci extension tool, however, is quite useful for traders to determine these areas. Using this indicator, the first zone is between $29 to $31, which aligns with both of the Fibonacci extensions. The second zone is at the 2618 Fibonacci extension of $39 and the last one is found at the $42 area. However, the next impulse wave will likely see a big surge in the Bitcoin, BTC, pair of Link. The recent run was spearheaded by Bitcoin, while the altcoin BTC pairs were relatively flat. Once Bitcoin finishes its correction and starts to move upward in a slow manner, the likelihood of altcoins outperforming Bitcoin increases. The altcoin BTC pairs have been waking up from their deep slumber in the past weeks, but it can't really be called an alt season just yet. Altcoins must still consolidate and build up strength for the next leg up. For Chainlink, such an accumulation is shown on the left side of the chart. Chainlink's price has been acting in an accumulation range for some time before the latest surge started to happen. For such a big surge to occur, Bitcoin's price must remain steady. Otherwise, the volatility in BTC will have an even bigger impact on the less liquid altcoins. Link/BTC now faces crucial resistance. If this level at 0,0007400 sats can't break to the upside, renewed tests at the 0,0005500 and 0,0004100 sats levels are possible. However, if Chainlink breaks through 0,0007400 sats, continuation is likely toward the next significant zone at 0,0011000 sats. In the USD pair, such a surge would put Chainlink close to the next Fibonacci zone at $39. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph. Every investment and trading move involves risk. You should conduct your own research when making a decision. XRP was trading at $0,28208 by 2000 hours, 1 o'clock GMT, on the investing.com index on Saturday, up 10.34% on the day. It was the largest one-day percentage gain since January 7. The move upwards pushed XRP's market cap up to $12,42574 or 1.32% of the total cryptocurrency market cap. At its highest, XRP's market cap was $30,58403. XRP had traded in a range of $0,27030 to $0,28303 in the previous 24 hours. Over the past 7 days, XRP has seen a stagnation in value, as it only moved 1.99%. The volume of XRP traded in the 24 hours to time of writing was $4,21478 or 2.77% of the total volume of all cryptocurrencies. It has traded in a range of $0,2416 to $0,3279 in the past 7 days. At its current price, XRP is still down 91 43% from its all-time high of $3.29 set on January 4, 2018. Elsewhere in cryptocurrency trading, Bitcoin was last at $32,707.90 on the investing.com index, up 9.53% on the day. Ethereum was trading at $1,228.54 on the investing.com index, a gain of 12.96%. Bitcoin's market cap was last at $606,90247 or 64.41% of the total cryptocurrency market cap, while Ethereum's market cap totaled $139,47520 or 14.80% of the total cryptocurrency market value. CBDC research has been announced as a top priority for the Bank for International Settlements Innovation Hub, or BISIH, in 2021. According to its annual work program, BISIH plans to explore the feasibility of faster and cheaper cross-border payments using central bank digital currencies. BISIH also stated it will explore prototypes of tiered retail CBDC distribution architectures and distributed ledgers to issue tokenized green bonds to retail investors. Continue reading on Cointelegraph. Hit the like button and subscribe to the channel.